Welcome to Spy Trader. It's your one-stop shop for all things related to the S&P 500. I'm Buttons McMullah, your guide through the sometimes choppy waters of the stock market. Today is September 3rd, 2024, and it's 6 p.m. Let's dive right into the latest news and trends that could impact your trading decisions. First up, let's talk about the recent turmoil in the tech sector. Nvidia, a darling of Wall Street thanks to its strong performance in the AI space, saw its stock take a nosedive of nearly 10%. This pullback has shaken investor confidence and caused a broad sell-off in tech stocks. The S&P 500 futures also noted declines as a result. In addition to tech woes, global oil prices are hitting new lows. Brent crude is trading at $73.71 per barrel, and U.S. crude is at $70.25. This is amid expectations that a dispute affecting Libyan oil production might be resolved soon. Weak oil prices are usually good for the consumer sector, but could spell trouble for energy stocks. To add to the anxiety, investors are unsettled with a series of weak U.S. manufacturing data. Historically, September is a tough month for stocks, and this year doesn't seem any different. Investors are steering towards safer assets like the U.S. dollar and Japanese yen, leaving the euro and sterling in the dust. The upcoming key economic data, including job openings, jobless claims, and the non-farm payrolls due on Friday, are also adding to the current cautious sentiment. Now let's get into some analysis and insights. The significant drop in Nvidia among other tech stocks can be a red flag. Why? It shows vulnerability in a sector that has been hot and heavily reliant on AI hype. If these stocks continue to falter, it might signal a broader market correction. Also, remember that the market's historical tendencies show September isn't particularly friendly to stocks. This intrinsic seasonality needs to be factored into your trading strategies. So, what can you, as a savvy trader, do amidst all this uncertainty? Here are some trading recommendations. 1. Consider reducing tech exposure. Given Nvidia's sharp decline and the broader tech sell-off, it's wise to trim some exposure to tech stocks. While tech has been a high flyer, current sentiments suggest a possible continued downturn. 2. Shift to defensive sectors. With economic uncertainty and manufacturing data falling short of expectations, defensive sectors like healthcare, utilities, and consumer staples look more appealing. These sectors tend to perform well in downturns and provide a buffer against volatility. 3. Watch economic data closely. The upcoming job openings, jobless claims, and non-farm payroll numbers will be crucial. Significant deviations from expectations could lead to sharp market movements. Being flexible and staying informed can help you react nimbly. 4. Safe haven consideration. Interest in safe havens like the US dollar and Japanese yen signals a risk-off sentiment. Consider parking some capital in these currencies or other traditional safe haven assets to weather the turbulence. Before we wrap up, let me throw in a little humor to lighten the mood. Why don't financial analysts use sparklers? They prefer fireworks in the market. That's all for today's episode of Spy Trader. Keep an eye out for those key economic indicators and stay adaptable as we navigate this unpredictable month. Remember, informed trading is smarter trading. Until next time, this is Buttons McMullah signing off. Happy trading.